Hi there, welcome to Kneppy Invest and welcome to November 26, 2024. I am currently on my lunch break. I've already recorded the stock of the day and it should be no surprise that is EML Payments. And maybe it is a surprise to some people, but EML Payments had the AGM. They also released a trading update and some financial year 28 goals. And the market has absolutely loved that particular announcement. Share price up about 30%. So look out for that video, which should be released about 2 hours after I release this video. And also recorded small cap stock of the day, which is a company called Neurotech. First time I've had a look at that company. So look out for that video on the morning of the 27th of November. I can't believe 10 years since Phil Hughes. Yes, 10 years since Phil Hughes. Absolutely astonishing how fast, how quick time goes. And let's hope the Australian cricket team can show a bit of fortitude because there's a chance that India might absolutely blow us out of this series. Anyway, this is not a cricket YouTube channel. This is about investments and the stock market, particularly the ASX. And I've just noticed we've had a pretty negative day. XGO down 0.69. As you can see, I haven't really looked at how the market has performed today. And I'm a little bit surprised. We are down by, the XGO is down 0.7%, but small caps is up and tech is up, which means my portfolio might not be down a fair bit. Resources negative day as well, which is not a surprise because when I did wake up this morning, I had a look at how the Wall Street did perform overnight. And then I had a look at gold and silver and they were down pretty big. I even think some of the other commodities were down big. So no shock that resources is down. Okay, the agenda for today's video. Got to make it fairly quick because those other two videos took about 12 minutes, not each, combined. So I want to keep this video to about 30 minutes. So we'll go through the ASX today, looking at the best and worst performing sectors, indices, and companies. So some of these might be a surprise to me. And then I will go through the top 5 stocks of the day. Funnily enough, 3 of the companies, in fact, the companies coming in number 3, number 4, and number 5 all have X as the final letter in their ticker code. That is a coincidence. I was going to say that is not a coincidence, but it is a coincidence that all those 3 companies have X in their ticker code. See if you can figure out which 3 companies these are. And the other 2 companies coming in number 1, number 2, an absolute no-brainer. Now, the only issue I had is which of these 2 companies will be the stock of the day. Hopefully, EML Payments share price is a little bit higher. The rise in the share price is a little bit higher than Gentrack, which released their financial results and the market liked it. Okay, so let's have a look at the best performing sectors and indices and look at tech. Oh, in fact, all the indices started out okay, and we have seen most of the indices drop during the day, apart from tech. So I'm wondering what has caused that little bit of weakness. I'm going to go to trading economics just to see if anything's happening here. So Asian markets struggle on a Trump tariff threats. Asian equity markets mostly fell on Tuesday as global sentiment soured after US President-elect Donald Trump doubled down on his threats to raise tariffs. I think this could be disastrous for not only the United States but also the world. Tariffs are not a good thing for anyone. Anyway, dollar jumps as funny thing is, dollar jumps as Trump threatens higher tariffs. He doesn't want the dollar to be higher. He wants it to be lower. So the policies he's putting in place will lead to the dollar actually increasing, not falling. And he doesn't want that, which is so intriguing what he's doing. Anyway, German business morale worsens more than expected. Oil hold losses on Middle East ceasefire hopes. Oh, Thailand exports notch 19-month high. There you go. Go Thailand. Anyway, let's go back to the markets. That's maybe why Trump tariffs, who knows. Maybe the market's going to rise significantly tomorrow on a different thematic. These thematics last about 1 day, if that at all. We all saw that with the, remember the yen carry trade? That lasted a few days, and then no one talks about it anymore. Okay, sectors. Staples had a good day. Go Staples. Go Woolworths. Is Coles in the ASX 20? Go Woolworths, Wesfarmers, although I don't think Wesfarmers is in that. Maybe Metcash. In fact, let's have a look. Maybe Woolworths had a really good day today. Let's have a look by market cap. Oh, Coles had a pretty good day, up 1.43%. Treasury Wine, Endeavour Group, A2 Milk, all had a good day. So today, was all about staples, and not that sort of staples, the one that binds things together. This is consumer staples, things we need, food, like that. IT up, real estate up, so maybe, hopefully, good day for Goodman Group. I would say more than likely. If you don't believe me, Goodman Group is probably, I'd say, 50 to 60% of the real estate sector. Let's confirm that. So Goodman Group up 0.93%. The market cap 73 billion. The next biggest company is Centre Group, which is 19 billion. So if you add all these up, probably not 50%, because I can see quite a few big numbers there, but it's getting close. And so the way Goodman Group blows, the way real estate goes. I'm a poet and I don't even know it. Utilities flat, and a really bad day for financials, and a massively bad day for energy. What happened with financials? Is that the banks? Is that why we're down? And hopefully my portfolio is up, because I don't have many financials. I have a few, but not many financials. Although EML Payments, they'll probably fall in financials. Let's have a look. What's happening with financials today? So I'd assume the 4 big banks are down big. So maybe a little bit of the bubble is bursting, or maybe that is true. So let's have a look by market cap. I expect some big reds there. CBA down 3.55%. The only thing I can think of is they might have gone ex-dividend. I don't know why, because they released their results quite a while ago, 21st of August. Is the oomph coming out of CBA and the banks? This could be one of the worst days CBA has had for a long, long time. If you have a look at the trade history, well, there's a day it was down 3%. That was on the 24th of September, but this was worse. On the 5th of August, down 5.7%, but I'm pretty sure that was the yen carry trade. That was the worst day, the last worst day for CBA. And then what about EML Payments? Is this in this particular sector, financials? I don't know. What's the TICO? Well, no, what's the market cap? It's like 300 million. If it is, it's a very small portion. In fact, there's heaps of ETFs here. There it is, EML Payments. Yeah, up 29%. Yeah, market cap 335 million, which means it's fairly cheap if their financial year 24 goals. Although I haven't talked about, I'm thinking about the video I just recorded on EML Payments, but you haven't watched that yet, unless you watch that first and then watch this. Anyway, I am rambling, and I can't ramble because I am time constrained. Okay, let's have a look at the ASX 20, down 1.16%. And we know why it's down 1.16%, because the biggest companies within the ASX 20, like the big banks, are down big. So this is not a good day to be heavily invested in the ASX 20, like many Australian investors are. In fact, I know quite a few investors who just invest in the ASX 20 because it's not risk-free, but much lower risk, which is fine, but there are buts there. And I'm not going to say that here. And 13, I forgot to do it. Do the how many companies up and down. 7 up, 13 down. So if you had a look at that, 7 up, 13 down, you might say, oh, maybe it's down 0.4% or something. But if you have a look at the market cap of this ASX 20, all the big companies are down. The largest company that was up today is Macquarie Group, which is interesting. The big bank's down, Macquarie Group up. So you can't lump Macquarie Group together with the other big banks. And today is proof of that. And there's Goodman Group up. And Wesfarmers is down, by the way. The worst performing company was Woodside Energy, which I didn't have a look at. Understandable. Maybe Woodside is getting interesting at these levels. QBE down, which is financials. And the best performing company, WiseTech, all over the place. And there's REA Group, which today I gave REA Group some money, even though I'm a shareholder. Gave them some money to list or put my house on the market. Yes, today's that day. Okay, now let's have a look at the best and worst performing companies on the ASX, looking at the top gainers and the top losers. There's going to be some surprises here. Okay, and the best performing company is Fosco. Pretty low turnover, but I do remember this TIG code in the list of announcements today. So what did they release? Let's have a look. Reinstatement to quotation, GASAT, permit approved, memorandum of understanding with Tunisian government and EBRD. I don't know anything about this company except they have some sort of project in Tunisia. And the only reason I know that is because I just read it. Fosco, is it phosphorus? Let's look at the chart, the daily chart for this company, and not big volume today. I expected much higher volume. I take that back because we see here turnover was fairly low, and we confirm that with the chart. Very low turnover for a day when the share price is up 75%. So maybe the day traders haven't discovered this yet. Maybe tomorrow will be a big day. Share price will rally significantly. And the other thing is the share price did close at the high of the day. That's significant. Okay, what else do we have here? Magnum Mining and Exploration. I've talked about this company in the past, but fairly low turnover. In focus group, couple raising, share price down. Share price has rallied again today. And there's EML Payments up 29%. And Gentrack Group up 28.1%. Company coming in at number 2 on the top 5 or the 5 top stocks of the day. And I'm intrigued at how the market viewed their results. On first look, I thought the share price would drop. Just shows you how much I know. Share price up 28% for Gentrack. Obviously, the market did like something within their announcement. I had a very quick look. Wouldn't say glance-through look, but for a long-term shareholder of that company, it was much quicker than what I would like. What else do we have here? Nothing much of note. Obviously, it's all about EML Payments and Gentrack today. Let's have a look by market cap, and towards the top of this list, we'll have, there's Life 360. So let's have a look at the Life 360 chart, because some people recently sold because the CEO or founder sold some shares, and unfortunately, we're starting to see share price bounce again. So panic. The founder sold some shares, not a lot of shares, and now the share price is rebounding. I fully expected this to happen. So there sometimes will be a short-term decrease in share price when insiders sell some shares, but sometimes that negative sentiment doesn't last all that long, and we started to see that negative sentiment turn around quite quickly for Life 360. So good day for that company. Helios, nice little rebound. Vulcan, I was going to say Vulcan Energy. That's Vulcan Steel, completely different companies. Cettire, nice little bounce. And that's about it. Okay, let's turn attention. By the way, I saw Echo Q there, Echo IQ. Yeah, I keep hearing this company, Echo IQ. Should have a closer look at it. Top losers today. Let's have a look. I would assume there's going to be a lot of gold companies when we have a view of the market cap. Company called Invian. It's not an ETF, I don't think. So they must be doing something. Maybe share consolidation or something like that. Invian. Change of company secretary. I don't know what's happening here with Invian, IVXDB. Let's move on to the next one. Radon Resources, RDN. So this could be negative drilling results, maybe, or couple raising, maybe. So what is it? Significant pegmatite system intercepted at handover or handover south. So negative drilling results for Radon Resources. And the only way I'm saying it's negative is because the share price is down. It could be really positive, and maybe the market has got it completely wrong, but I doubt it. The market is smarter than I am by far when it comes to these sort of things. And let's have a look at the chart. And I mean, there is this little argument that the share price is, or the valuation of this company is now lower, but it has fallen through a support level. And you can see the share price bounced off this level, which is about 2 cents twice in the past year. And today it's just fallen through. Bad day for Radon Resources. What else do we have here? Ashley Services. I do remember this company releasing something today when I had a quick look at the announcements. What did they release? Oh, they had the AGM. So 2024 AGM addresses and earnings and banking facility updates. So obviously this earnings update more than likely is a little bit negative. Hence, Ashley Services share price is down. I'm not going to have a quick look at it because I'm, again, short of time. But let's have a look at the chart for Ashley Services. And again, this is an ugly looking chart. This is screaming to me, stay away. And you can see multiple times in the past year and a half where the share price has just collapsed in a day. So that's obviously negative announcements, and it just keeps on happening. So there's no reason to get excited about Ashley Services, and not only today, maybe ever. Maybe ever. Maybe I'm being harsh, but not a good looking chart. And nothing else of note there. So let's have a look by market cap. So I do expect, as we have a look by market cap, quite a few gold companies like Spartan Resources, Aroa Mining, Sayona Lithium, isn't it? AMA Group, who knows what's happening there? 4D Medical, yeah, Integrated Research, not sure what's happening there. Experience Co did have their AGM today, I'm pretty sure. Experience Co. So maybe it was a negative AGM. They did have release their address and presentation at 11:15 a.m. If we have a look at the chart, maybe the share price dropped on the release of that particular announcement. Let's have a look. Let's have a look at minute trading. And there's nothing much to see there. There's nothing to see at all with that. And is that the right chart? You can tell I have not looked at this chart for a long time because the share price is in a well-defined downtrend, so there's no reason to have a look at this. I am a little bit surprised the share price is like this, or the chart is like this. There's me pulling an uptrend line many years ago, and it broke the uptrend line in February 2022. And I probably haven't looked at this company since then. I might have had a quick look back in early 2023. Looks like maybe the chart was turning around. But yeah, I'm actually a little bit surprised the share price is down so much. Not today. I'm talking about over the last year and a bit. Well, over the last 2 years. Yeah, interesting. That's Experience Co. For those who don't know, they have... I'm pretty sure they have different... It's sort of like a group of different travel companies. Like they have Bright Water Rafting Company, a skydiving company, maybe even a Great Barrier Reef tour company, something like that. So they are primarily, if not completely, situated in far north Queensland or the North Tropical Coast, that sort of area. Yeah, they did release a trading update on the 30th of October. Obviously, that was a little bit negative. Okay, let's go back to the top losers. And I think that's about it. Okay, so let's turn our attention to top 5 stocks of the day. I've got to go through this fairly quickly, like in 12 minutes or so. So we are going to be talking about 3 companies who have a ticker code with the last letter being X. Do you know what those 3 companies are? The first one is Aroa Biosurgery, ARX, share price up 3.1%. Released results today. The whole reason I was more interested in this company isn't necessarily the results, because I don't think the company is profitable just yet. We can confirm that by having a look at the results. It's mainly the chart. I was actually quite interested in the chart. So let's have a quick look at their results. So product sales up 25%. That's pretty nice. Going through all these little numbers. They also full year financial year 25 guidance maintain, so a firm previous guidance. I'm not seeing anything about profits, or they do have EBITDA, so EBITDA loss, so which means they're not profitable. But more than likely, the EBITDA loss is not as great as it was the previous corresponding period. I wonder if they talk about when they might become free cash flow positive. There is a bullet point here. The company remains debt-free, which I do like, with a cash balance of 21.6 million New Zealand dollars, which is about 5 cents Australian dollars. Yes, I am kidding. That's not true. As at 30 September 2024, providing adequate cash as the company advances toward positive cash flows, which I'm not sure when that might be, unless they do actually mention a time, sort of like a goal. Anyway, so let's have a look at the chart. Why am I excited about Aroa Biosurgery? It's just based off the chart. Now, the chart did not look good until recently. In fact, the share price had been a downtrend since about the middle of 2023. So down she goes. This was a favoured company among viewers of this channel, and also among stock pickers of the fund managers at the end of financial year 23. This was a very popular pick for financial year 24 and beyond. Unfortunately, until about now, the chart has not been looking good. Now it's starting to look good. I do like this chart. And today, possibly has confirmed the share price is moving into an uptrend. So good looking chart for Aroa Biosurgery. And I don't mind the company either. And if they do achieve profitability and cash flow, that is a good sign moving forward for Aroa Biosurgery. Now, the next company with a ticker code of X as the last letter in their ticker code is ASX. Share price down 4.3%. Okay, a little bit surprised. Well, maybe not. Okay. So we know the debacle about their update to whatever they were doing, their chess project. I don't know. I haven't been following that closely. But they have provided an update on release 2 of the chess project. Now, I do know a few people who are keen on this company because of their moat. So they have this is a monopoly. They have a moat, unbreakable moat. The problem with having a moat like this is I think you do become lazy, maybe. And you don't really seek out to improve your company all that much because the moat is your great protector. And possibly that has been ASX's greatest downfall over the past 5-10 years because the chess system they have now, I think, is not the best. Anyway, I had a very quick look at this. They're talking about 2029. And I was like, 5 years from now? So here it is. Chess release 2 implementation targeted for 2029 with estimated project costs of between 270 and 320 million. Let's go have a quick look at Cobalt Reef just to see what they say. There we go. ASX shares slide on Chess 2 cost estimate. So if we believe what Capital Brief is suggesting or implying here, the whole reason the share price is down is because of the cost. So 270 and 320 million. They continue to work towards 226 for delivery of release 1, with estimated project costs currently expected to be at the upper end of the previously communicated range. Okay, that is negative. That's slightly negative. You may say, why is it negative? It's in the range, but it's at the upper end. There was also the possibility it could be the lower end, and that would have been positive. So this is actually negative when it comes to the costs. Yes, I can definitely see why the share price is down right now. Okay, I don't know anything else about this program, what they're doing, but I just know that ASX has been, what's a kind word? I was going to say derided is not a kind word, but this company has been derided in the past because of what happened a few years ago, and they just completely did away with it, whatever they were planning. So let's have a look at the chart for ASX. So the share price was in a downtrend between August 2022 and January of this year. And to be honest with you, the chart was not looking that bad before today. Now, this could be just a little blip, but I didn't mind this chart before today. Definitely the share price had come out of the downtrend, and that was true maybe a year ago, at least 9 months ago, and the share price was trying to break out. The reason I say it was trying to break out is because if you have a look at the highs we've seen recently, there was 3 highs. And yesterday, the share price broke out above that high. Now, I do prefer confirmation that it is a breakout, and today we have seen it fail. So the breakout lasted a very short period of time. It's about 1 day. So it was looking good until yesterday or this morning, and today, no. So unfortunately, potential breakout, not there now. Just a potential. Not all things with potential succeed. Okay, so that's ASX. Now on to the other company that has a last letter X in the ticker code, and it's Novonix. It could have been very close to being the stock of the day yesterday. You see share price is not down or up. So why is this in the top 5 stocks of the day? Because I'm going to forecast right now when shares in this company go back to being traded, the share price is going to drop 15, maybe 20%. The reason I say that is Novonix, the share price had increased a lot, the management have decided to do a capital raising to accelerate growth. Okay, so let's open up the equity raising to achieve commercial production. And the main thing about capital raising is how much of a discount it is. Now, don't forget, so if you look at the trade history, on the 22nd of November, so the end of last week, the share price closed at 74 cents. Yesterday, on the 25th of November, share price closed at 96.5 cents because the share price was up 30.4%. So when the company announces or goes into trading up because they are doing a capital raising, more than likely, because if they look at the 5-day VWAP, it's going to be at a significant discount. I would say, and I have not had a look at what this capital raising price is, I would say it's more than likely going to be below, I'd say 10% below the share price we saw, the average share price between, say, the 18th and 22nd. So maybe 70 cents. I'm going to say the capital raising is being done at 70 cents. If it's higher than that, I think it's actually pretty good for shareholders. So the only reason shareholders might be disappointed right now is because of the rally in the share price yesterday, and this could put a dent to the chart. And I did have a look at the chart yesterday, and I actually like the chart. Anyway, so let's have a look at the share price. Oh, it's 60 cents. So I was thinking 70 cents. This is 60 cents. And you can see they actually used the 5-day VWAP. And the 5-day VWAP was 85. Now, that includes the share price yesterday. So it's a 30% discount and a 38% discount to the closing share price yesterday. So that could be a reason why the shareholders might not like it and why we might see the share price drop a fair bit. Now, you will see and the shares will go back to being traded when the company announces their placement. I'm pretty sure they're doing placement. Let's have a look. In fact, I don't know. I would say they're doing a placement. Have a look at the announcement again. Yeah, they're doing a placement and so Phillips 66 placement. When they announce the successful placement or the placement is successful, that's when the shares will go back to being traded. And 44.4 million through a fully underwritten placement to institutional and sophisticated investors. Usually it's the other way around. Usually the placement is a much bigger number than the sort of the other part of the capital raising. Although this is a placement also to institutions. So maybe the placement institutions is going to be significantly more than 40, no, maybe not significantly more, but more than what you and I could get. Oh, actually, they mentioned this here. So 44.4 million placement to institutions and sophisticated investors. That's the biggest term. $5 million to Phillips 66 and $5 million for you and I. So we only get $5 million out of 54.4 million. Not that I'm going to partake in the capital raising because I'm not a shareholder, but I can see why if I was a shareholder, I'd be pissed off with this. Give more money. Let the shareholders have better go at participating in the capital raising because I would suggest if this capital raising is fairly popular among shareholders that you won't be able to get as much as you want if it's popular. If it's, popular. And I would suggest it will be because it is a pretty big discount. Okay, so that's Novonix, but the chart was looking really interesting. I was actually thinking, ooh, this could be a breakout yesterday, and this is why. So I would assume the share price going back to, say, between 70 and 80 cents. That's what I'm going to say right now. So probably a 20% drop in share price when it goes back to trading. Now, if the share price doesn't drop all that much, that will be a really good sign. But again, you're going to be screwed because if the share price only drops like 5% and you can get shares at 60 cents, it's going to be very popular, this capital raising. And because it's only $5 million, there's going to be a scramble. So yes, unfortunately, again, the institutions win out. Okay, let's turn our attention to Gentrack. Coming in number 2. Share price up 28.1%. I'm a little bit surprised by this. I'll be honest with you, I'm a little bit surprised. Obviously, I have not gone through all the announcement, all the results. I had a very quick look at the market announcement, so I suppose this is the media release. And my first thought was, ooh, there's a possibility the share price might drop. That was my first thought. You can see how wrong I was. Now, revenue up a fair bit, but they actually mentioned that EBITDA flat. Now, there are some reasons behind that, which they go into, and I was thinking, I'm not sure the market is going to fall for that. Statutory profit down from 10 million to 9.5 million. A nice increase in cash. So it looks like there's a nice increase in cash flow. So 66.7 million, $17.5 million increase from last year after 12.9 million Amber investment in half year 2024. No dividend payable. Okay, so I quickly went through this and I thought, there's a chance the share price might drop. Now, I'm not sure how these results compare to expectations. They could beat expectations. And I did not have a look for any sort of trading update or any sort of guidance for the next financial year. Typically, companies won't provide that. They did have an outlook. So this could be why the share price is higher. So I remain confident of our midterm guidance of growing revenue more than 15% CAGR and EBITDA margin of 15 to 20% after expensing all development costs. Okay, so that's all they really had. Okay, so let's have a look at the chart for Gentrack. So again, as a shareholder for this company, and for those who don't know, I've talked about this company a few times in the past. I bought this as a trade. There we go, $1.41 way back in late 2020. And then I held shares in this company for about 2 years and share price did nothing. This was a great case for patience, not the game, card game, for just being patient. I had no intentions of selling my shares in this company for some reason. And then the breakout happened. Breakout happened late 2022, almost 2 years after I bought. And this was a classic breakout. I still remember this. And the funny thing is, if I did not hold shares, I probably would have bought this breakout, but I would have bought at a much higher price. Yeah. And the share price has just kept on going up. This is a beautiful looking chart. I have got a sell line. So my sell price is about $8.50. Share price did get very close to that price twice, once in August and again back in October, early November. And I was paying close attention, going, oh, please don't fall below it. And then today. Well, today has blown that price out of the water. And more than likely, I will increase my sell price for Gentrack. I'm just thankful I did not sell because the share price wasn't doing much over the past few months. So thank you, Gentrack. But the stock of the day, and I have done a standalone video on this company, has to be EML Payments. Share price up 29.2%. I thought the share price would be much higher for EML Payments than Gentrack. I just knew this was going to rally today, and I won't talk anymore. Have a look at my standalone video on this company because I am running out of time. I wanted to get to some of your comments. For some reason, I need to burp. I want to get to some of your comments, but unfortunately not today because I'm out of time. I've got 5 minutes. Actually, let's do one of your comments. Let's do one of your comments. So who's going to be the lucky person? Go to community. Dave, that can't be right. Fishball, you are the lucky one. Let's have a look. So you've done 3 comments in a row. Okay, I've been looking at commodity chart. I bought both oil, Woodside and oil ETF, and coal, Whitehaven and New Hope when it was low. Did well, and I'm very comfortable when I was holding them. I'm now very interested in Cobalt and others. Any other commodities you think is at the bottom of the cycle. Let's have a look at Cobalt. I don't know if I have a chart for Cobalt, so I'm just going to assume that Cobalt is, what do you call it? A proxy for the metal. So the chart looks ugly, but has it found a bottom? Possibly. So share price did get to a bottom in September at about 6.3 cents. Share price is very close to that level now at 7 cents. I wouldn't be surprised to see the share price of this company go sideways. So this could be a bottom. Any other companies out there when it comes to Cobalt? I do know Cobalt, been following this company for a long, long time. Never been a shareholder though, but it's okay. You can follow companies forever and still not buy them. What's the other bit? Any other commodities you think is at the bottom? So I'm still interested in lithium. I think lithium could be near the bottom, but it keeps on dropping. Every single time I think it's near the bottom, it keeps on dropping. Other than that, that's the only one I can think of because all the other commodities I don't think are at the bottom of the cycle. They're either going up, like gold, silver, that sort of thing. Nothing near. Oil might be interesting. If you have a quick look at oil, let's have a look. Markets. If I can find it here. Oil, $69. I think around about $65 is a nice support level for oil. But the problem with oil is if you have a look at the weekly chart, it's done nothing over the last 15 years. This goes back, let's go back 20 years. If you have a look at the 20-year chart for oil, it's just done nothing. It's done nothing over a 20-year period. I'm not sure if this is not a good chart for oil. It's very, it's a very meh. If I saw this chart for an individual company, I'd say it's not a high-quality company. It's actually a telltale sign of a low-quality company. So does that mean oil is low quality? Yeah, well, maybe. Okay, that's all I have for today's video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.